You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group and co-hosts Uncle Mike Tosaw from St. Charles Wealth Management, Mark the Greasy Meatball Sebastian from OptionPit.com, Andrew the Rock Lobster, Joe Benazzi from OptionPit.com, and Henry the Flowmaster Schwartz from Cboe. The Option Block is brought to you by Cboe. Cboe's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of Cboe Global Markets Incorporated or any of its subsidiaries, collectively Cboe. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the Cboe products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back. It is Thursday. It is noon Central. It is 1 p.m. Eastern. Do you know what's popping off in the world of options? Well, it's a lot, turns out. Let's find out together, shall we? My name, of course, Mark Longo from theoptionsinsider.com. Reminding you a couple of things here at the top of the show. A, if you're not listening to the full network, what are you doing? You're missing out on nearly a dozen shows coming at you throughout the week to light up your world with options content. And, of course, you want to go above and beyond. You want to get awesome pro Q&As. You want to get options oddities after vol views. You want to get giveaways, live streams, all sorts of fun. TheOptionsInsider.com/pro is the place to go to learn more as we learn who's joining us on the old Thursday episode. First, let's go out to the hinterlands of Chicago, where we are joined once again by the uncleist of Mikes, Mr. Uncle Mike Tosaw from St. Charles Wealth Management. Uncle Mike, welcome back to the program for the Thursday episode, sir. How are things in St. Charles?
Always a pleasure to be here, and I believe this is the second to last Thursday episode of the year.
It might very well be, sir. The clock is ticking. Not much time left, or really any time left for the Rock Lobster. I think his hole is insurmountable to dig out of on the trivia challenge. We will crunch the official numbers, of course, but I do think this week you kind of put the kibosh on it, sir. Nailing Jesse the Body before the question was even asked, sir. So that was kind of just the year of trivia challenges in a microcosm right there. The Rock Lobster not even getting out of the gate to start this week. A rough one for the Rock Lobster out there. As we keep rolling, it is the Thursday episode, listeners. So we are joined, beaming in from Cboe East, surrounded by ballerinas, because he loves the Nutcracker. He is none other than the Flowmaster himself, Mr. Henry Schwartz from Cboe. Mr. Flowmaster, welcome back to the show, sir. How was the big Cboe East holiday soiree last week?
We did have a really nice holiday party last week. Lots of people and good food and some good drinks. There was a theme. It was a ski chalet theme. So people wore ugly Christmas sweaters and stuff like that. But things are good in New York, and yeah, you're right. We're in the final stretch to year end and to the holidays, and everybody's starting to disappear. The market is certainly not taking a holiday though, so we got a lot to talk about. Might want to make it an extended hour.
A lot to talk about.
Tack on.
It tried to disappear yesterday. It tried its hardest. We'll get to all of that right now, listeners. It is time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block, the portion of the show where we break down what the heck is trading. And as the Flowmaster alluded to, a lot to break down on the show this week. Lately, the Fed's been kind of sleepy. Of course, everyone even forgot we had a Fed right in pretty much the immediate wake of all the election madness last time. Kind of got overshadowed, understandably so, out there. But the Fed very much on the radar again, especially when we're at the tail end of the year. Not much going on, not much else really on the radar. And so Powell and company coming into stark focus yesterday. And what do? They just scared the hell out of everybody out there in the markets. It kind of went live while we were doing our futures rundown yesterday. And it was a great example of the potential or perhaps the horror for intraday swing trading for futures traders, because we saw the worm turn on a dime. Yes, Powell and company really crushing the market. S&P off around 3% at one point during the day. Other indices off around similar percentages, if not more. Just really taking a lot of the wind out of the sails. This market's been kind of rallying on a couple of things. Obviously, AI carrying a lot of that, but also the baked-in rate cuts that everyone was targeting through this year. We didn't really get as many as anyone expected or hoped for this year, and now next year, Powell and company saying, maybe pump the brakes a little bit, and also maybe that bugbear of inflation maybe hasn't really gone away, which that shouldn't be a surprise to anyone who's seen the CPI and PPI numbers recently, but still, nonetheless, when Powell and company say it, it has a little bit more gravitas to it. Powell and company really kind of just going out in a blaze of glory. It seems like I think they know no renewal for him under Trump. So go big or go home, I suppose. And he's not going home, listeners. So the market's getting annihilated yesterday. VIX cash skyrocketing. It was a weird day to look at VIX because obviously we had DEES rolling off the board. So that always makes things a little bit weirder. At one point we had, the cash at like a 22 and the DEES future going out like a 15. So there's that weird period where, when VIX is going away and a Fed day is happening. It's kind of a weird disconnect out there. Coming into the start of the day today, we got up to about 23 3/4. That is pretty much, we're about 23 1/4 right now. Still up nearly 9 points from the Monday show, 8 3/4 points. And people were probably confused yesterday looking at the future saying, wait a minute, the futures aren't really reflecting this. But of course, DEES had to go the way of the dodo. Now looking at the Jan sliding into the pole position, the futures and the cash not going to move 1-to-1, listeners. At about a 20-60 with the cash at about 23 1/4. So that shows you the premium of the cash over the front future right now. For all of you out there who are looking at VIX options saying, wait a minute, I'm seeing, weird, wild numbers on my board. We saw it up to 27 and change yesterday. I'm not seeing that reflected in my options. That's why, obviously, the future's a very different game, but still a wild period for vol out there. If you need another reinforcement of that, look no farther than VVIX at a 129 right now, up a whopping 32 points. We're back up in that kind of lower pandemic range we saw during the height of that kind of madness out there, where we were hanging out well north of 100 in VVIX for quite a long time. So back up to 129, getting into the, dare I say it, the spooky town in VVIX. In the old days, in the pre-pandemic days, 125, 130 was kind of seen as the upper bound, the top for volatile vol. Sometimes you could blow through it a little bit, but that would be very short-lived. Usually, if you drifted up to this range, you're going to come crashing back down the other side and vol. These days, post-pandemic, who knows? A very different ball game. So a lot to unpack out there. I know the Flowmaster is excited, so we will start with him. Mr. Flowmaster, a lot going on this week. What caught your eye, sir?
Well, yeah, I'll tell you. So yesterday's volume was almost 68 million contracts. That makes it, puts it in I believe that's the 6th most active day ever. I'm working on some stats for year end that I will try to get out. But I mean, I'm just looking at the top days of the year. You know, we have a couple days over 70 million contracts this year. You know, yesterday's volume was just below basically kind of the stuff we saw, you know, in the busiest days, way above COVID, of course, because, you know, the volume's almost doubled since then. So incredibly busy. I mean, what really jumped out at me, everybody knew there was a Fed meeting. I looked at what the straddle was pricing. You know, we were basically not really looking for much of a move. And in fact, I think the based on the pricing, I was able to dig up the implied vol, which was around 13. Yesterday's move equates to almost a 3 standard deviation, actually 3.7 standard deviation move, which for people that are heavy into stats means it's incredibly rare. It's actually about a 1 in 6,000 probability if you go along with the assumptions that are kind of built into that. But I did ask ChatGPT to give me a few things that had a similar probability of 1 in 6,000. And the first on the list was getting hit by lightning. So in the United States specifically. So yesterday's move, which really did get very violent at the end of the day, really was kind of one of the biggest we've seen. And you know, as you said, you know, volatility, you know, effectively kind of exploded. It was in percentage terms. In VIX, you know, we're up almost 75%, right? Because VIX had been pretty low. That was, I believe, in the second biggest jump in terms of the percentage of VIX itself. So from a really low level to back to kind of where we are now, which is a little bit off of where we finished the day yesterday, but still, you know, 23 and a half. Yesterday, I think we finished closer to almost 29. So just a ton of volume. You know, I think it is really interesting because, you know, I agree with what you're saying. You know, that I don't think it's a huge surprise that inflation is kind of still something to be worried about. I think part of the kind of the uncertainty and volatility here has a lot to do with the politics of things, right? You know, for a little while it looked like Powell wasn't even going to stick around, and then the last comments out of Trump I've heard is that he doesn't really have any problem with him sticking around. So, you know, in a way, you know, I was actually wondering how the media was going to characterize that move, right? Because, you know, 3% move is really big, especially because we're used to very muted realized volatility. But you got to remember, we were up almost 28% on the year for the S&P and similar for NASDAQ. So we have a lot of room to kind of correct, which shouldn't really blow up too many people's year. But you know, you get towards the end of the year, the liquidity definitely is a little bit thinner. A lot of people are on vacation. It reminds me a little bit of that August 5th move, right, which happened really kind of on a Sunday night when the Nikkei was down 12%. And basically, you didn't really have too many people on the trading desks that had the authority to kind of make some big decisions. So things got, you know, the liquidity just fell apart. So we're doing some studies on kind of, you know, just what happened to the quote quality in that last hour and a half. But it definitely got, you know, felt a little panicky out there. You know, today there's a bit of a bounce, although it's not nearly as strong as it was early in the day. So, you know, I think you have a lot of people looking around for bargains. Certainly some people are still very nervous that maybe there's more problems to come. And then a lot of people just want to go away on vacation.
Yeah, they don't want this noise. But, you know, if you listen to our shows last week, listeners, I was kind of expressing my surprise at the complete lack of reluctance out there in the market to annihilate vol. I was even saying, did they forget we have a Fed still coming up, and these numbers we're seeing, CPI, PPI, not great. You know, it's strange to me. I've said this many times in the past. folks come in who just hit the bids on vol ahead of big events, Brexit. We've seen it play out many times, elections. They were doing it ahead of the election this year. Worked out kind of all right, but we've seen that bite people in the butt many times in the past. Hillary, 2016 comes to mind very recently. And then, of course, doing it again this week. I get it. It's a seasonal time where you don't want to carry a ton of vol, but man, keep a little bit in reserve. Keep a little powder dry for Powell and company for the multi-standard deviation move that they delivered. It was, I won't say free money out there yet, but things were cheap out there. If you wanted to put on a little bit of upside, whatever it was, VIX calls, could be VIX verticals. I talked about on oddities, my ratio UVIX vertical 1x2. That was a nice thing to have on yesterday. All these, I did that for, I actually paid a penny for it. I paid money for it this time instead of getting paid for it. But still, there's a lot of things you could have done to set up ahead of this Fed move that wouldn't really cost a lot. And again, just when everyone else is dumping the vol, listeners, maybe, and there's a big event still to come, maybe you want to put a little in your back pocket for a rainy day. Just a lesson to keep in mind out there. But I digress. And I got so excited at the top of the show, I didn't even mention where the hell we are right now today. Of course, we came out of the gate hot today after S&P, after selling off nigh on 3% yesterday. They were trying to pop it hard again today. Obviously, we're back below 6,000. Blew through it yesterday. They tried to rally it up to about 59.30 and change this morning. Then it seems like the bloom came off the rose. They crushed it back down below 5,900 to about 58.86. We've kind of been vacillating in this range throughout most of the rest of the day as well. Still sub 5,900. S&P up about 1/3% right now. NASDAQ up about 1/3%. Dow up nearly 0.5%, about 0.4%. But that's, of course, off a drubbing. And the Dow, you've been hearing this story for a while. The Dow has just been taken to the woodshed over 10 days now. I think something along those lines of just aggressive losers. The worst streak in Dow in quite some time in the Dow. So just a lot going on out there. I got so excited at the top of the show list. I didn't even set the table for where we are right now. All right, Uncle Mike, a lot going on yesterday. Not really by any stretch of the imagination an Uncle Mike type of day. Seems like they started out of the gate today looking Uncle Mikey. Seems like they're trying to claw it back now. If you look at VIX right now, it's showing you that things are still looking a little frothy, a little spooky out there. What's catching your eye? And not exactly an Uncle Mike type of week, sir.
No, so what I did yesterday is I just turned my computer screen upside down and then I felt normal again.
Oh, okay, that's good.
That's the way to do it on a chart. It looked better, but it was going right to left instead of left to right. So that was a little bit wonky. But then I got the mirror out and then everything was fine. So that's how you deal with a down day in the market. But on a serious note, I would say that yesterday was not the Fed's finest moment, in that if we're still not out of the woods with inflation, why are we lowering rates? Because that was kind of the message that he was saying yesterday. And so I guess I don't understand why they did lower rates yesterday. And I guess based on what he was saying at the press conference afterwards. And so it left me scratching my head quite a bit, and it left me uncertain based on what he was saying. So when I'm uncertain, I guess the market's uncertain, and then we sell off like we did. So that's life. Now, the other thing that I'm noticing is that we're lowering rates, but also the bonds sold off. So the bond market's not buying this, apparently, and literally. And stocks obviously sold off. So I don't know. It left me, I think Andrew described this a few years ago. He's causing confusion and delay. And that really kind of... The expectation of the quarter-point rate cut was there, and that's kind of what I think everyone figured would happen yesterday. But just some of the things with which he said at the press conference just did not make a lot of sense to me. But the good news is that if our heart, in terms of the bulls in the market, all my buddies at my bull meetings, the fact that we are just maybe roughly 2% off all-time highs, and we're up only 26% instead of 28% or whatever it is right now in the S&P, and we are on December 19th. That's really not a lot to complain about. So some individual names that I'm looking at today, Apple back above the 250 mark. So we do have that. I think that's kind of, it's hard to have an up day without Apple having an up day, and Apple's definitely having an up day today, that's for sure. So that's a good thing. Not at its all-time highs, but it's still doing well with it. And I think that with where we're going with everything, we'll see if this is just kind of a minor setback and the market just being confused based upon the press conference. And perhaps this could be a buying opportunity. Everyone got really scared on August 5th, and we saw what happened shortly after that. But then the other thing that was mentioned earlier, people want to be on vacation. If you're a big fund manager and you want to go on vacation, you know what? You got a 26% up move on the year and maybe outperform. You know what? Let's just sell out. And so what if we miss out from 26 to 28%? Big deal. Maybe that's the mentality as well. So a lot of things happening. The good news about where we're at with the Fed now is that I'm hoping next year the Fed is out of the market, if you will, meaning that some people are saying one rate cut, some people are saying two, some people are saying none. Either way, that's not a lot of Fed activity. And so maybe next year we can start looking at, what do you call it? Stocks themselves. So that'll be nice next year if indeed that happens. And that's what my take is today.
Uncle Mike, I think what happened is that the Fed and Powell heard you complaining about having to roll all your calls all the time. So they decided to take that worry away from you for a day or two. It must have been nice, sir. You must have been relieved and thankful for that, sir. You know, all this upside you're having.
Yeah, that was nice of them. I appreciate that.
I think they were doing a favor. I mean, you're right. It was contrary to what they were saying. But they said, Uncle Mike, he's too busy to roll his call. So we're going to do this for him. Take that worry out of his hands. I thought that was at least very nice of him. Are the markets nice today? The markets are... I don't think this will surprise you, listeners. Quite the banger out there on the street today from an overall options volume perspective. Henry was saying yesterday, 7th busiest day ever. These numbers now that we just kind of casually throw around are just still so wild to me and to anyone who's been in the options game for more than a few minutes. Just seeing these numbers. I mean, the whole year, not that long ago, was sub 4 billion contracts, 3.5, 3 3/4. Again, not that long ago. We're talking like a year or so before the pandemic. Now we're talking 1.1 billion contract months, threatening 100 million contract days out. All wild stuff out there in the world of options. So is today another one of those wild days? Let's find out, listeners. Let's start in VIX land. And yeah, VIX is looking pretty spicy out of the gate today. You'd expect that. A day when the cash is moving around like a wild, demented person. And the day after popping aggressively hard, after when the futures or options are going the way of the dodo. All sorts of paper going up last couple of days, and today no exception. 7:31 on the tape right now, listeners. So yes, we are already past our seasonally reduced 702,000 contracts for the ADV. So a hot day out there. What's lighting up the tape out there? A couple of interesting things. Looks like our 1x2 friend is back, but the put might be thinking call 1x2s. I was just talking about my UVIX 1x2. How about a put 1x2? That's what we were talking about before in VIX, and looks like they're back now. 10,000 by 20,000 times. This time in Jan, the Jan 1815 put 1x2. Obviously buying one, selling two. Doing it. Looks like they paid about 94 cents for us. That shows you kind of where we are right now. 1815 1x2. Still got to pay nearly $1 for that bad boy. Be like that, listeners? 10,000 by 20,000 times. That was going up out there today. It's like we have a total of 50,000 of the Jan 15 puts going up out there today. So, and we got 37,000 of the 18 puts, so 31,000. So they have come for more throughout the day. Not quite 1x2 ratio total, but interesting stuff out here nonetheless. So hot action on the put side in VIX. Are you down with that 1x2, listeners? Are you up to something else? What are you up to out there in VIX land right now? Did you have a little bit of upside in your back pocket in case Powell and company did exactly what they did, spooked the hell out of everybody yesterday? Whenever I see the Fed watch just unanimous and vol getting crushed, it always makes me just tempted to put a little bit in my back pocket. This was definitely one of those weeks to do just that. SPY, 5.9 million contracts right now, listeners. That is super hot out of the gate. Usually SPY, we expect this time of the show, 4.25, 4.5 million, somewhere in that ballpark. Nearly 6 million. In fact, if I re-racked it right this second, we might be over 6 million. 5.98, almost 6 million, listeners. Just a tick underneath. The ADV is 6.84, so yeah, spoiler alert, we're going to hit it. By the way, also adding to the fun out there right now, SPY going ex-div. Everyone always forgets every quarter. We get emails like clockwork. What's going on with my SPY? There's a dividend in SPY. People forget that all the time. We are going ex-div right now. Just bear that in mind out there. Going to drive some flow today as well. So a lot of things driving flow and SPY today. The S, no slouch. She's saying, don't forget about me, kid. 2.4 million contracts on the tape for the S. It's been a while since we've seen the S this hot right now. So S putting up some numbers. The ADV, 3 million. I got a feeling we're going to hit that maybe even by the end of the show. Let's look really quickly, listen. Let's do our favorite little analysis here in the S. What's going away today? And it's all today with the exception of one, listeners. How does 20,000 of the 6,000 calls expiring tomorrow sound? They went up today. Looks like they might have been closing those. Maybe somebody getting the hell out of Dodge on those for whatever those are worth. All right, now let's see. What are they getting for those bad boys? They got nearly $2 at one point. $1.90 when we were a little higher earlier today. So again, still a little value left in a 6,000 call that expires tomorrow. You're still getting nearly $2 for that bad boy. That kind of shows you the wild times we are in. Would you pay? Let me flip that around, listeners. Would you pay $2 for a 100 handle out of the money call expiring tomorrow? It's like someone traded it close to that level this morning, listeners. Yes, either way, closing in on 2.5 million contracts. Small caps also just hot out of the gate today, listeners. 1.71 million. Been a while since we've seen small caps blowing through their ADV before we even get to them on the show. The ADV is 1.44 million. Just a hot day out here in small caps. What is dominating the tape? Now, small caps, we know the deal. They're not all dominated by 0 day. The big dog out there today is a 0 day contract. Well, a 1 day contract, actually. 82,000 of the 220 puts expiring tomorrow. Right behind it, though, we have 65,000 of the 210 puts expiring in January. So that's why I like small caps. They spread the wealth around, and they're doing a lot of spreading out there today. Listen, it is a hot day. What about the Qs? Are the Qs sleepy? Are they forgetting what's going on out there? The answer is no. By the way, the Qs also going ex-div, so just something else to bear that in mind. Everyone always forgets in these ETFs that there are dividends, and so Q's going ex-div. That's going to add a little fuel to the fire today as well. And it is quite the hot fire. 3.06 million contracts on the tape right now. In fact, if I re-rack that now, it's 3.11, which puts it less than a million contracts away from its ADV of 4.07 million. So just a banger by just about any stretch of the imagination out there. Listen, a hot one indeed. Now, the question becomes, does that heat, does that spill over into the single names? You know, sometimes a lot of red on the screen, everyone goes macro, everyone forgets about the small stuff, and we actually have surprisingly light days. Is that the case out there right now? The answer is no, but it's not quite as explosive as you might expect as well. 348, that's probably in the ballpark of what I was going to, if I had to hazard a guess today, it'd be somewhere in that range, 325, 350. I wasn't expecting a 425, 450 day. That's just not usually how it plays out here on these wild macro big picture days, listeners. A number 10 gets us to SoundHound AI. I haven't talked about them in a little bit. They put up 348,000 contracts, which is exactly what it cost you to break into the top 10 today. 1866 is where they're trading, off about $2.20 or about 10.5%. So stock taking out. See, a lot of people are talking about this one versus the name we were talking about last week, BigBear.ai. Which one do you pick? Seems like right now they are not picking SoundHound. But either way, putting up 348,000. Let's just look. Can't do this for all of them, listeners, because it'll take up the whole show. Let's look really quickly and see what people are doing out there. It's the 20 puts expiring tomorrow. Those are looking pretty good. Almost 19,000 of those have gone up today. With the stock 1864 right now, those are looking pretty good. Whoever paid $1.95 for them, you better get the heck out of Dodge pretty soon, though, because obviously a 1 day to go put, that $1.95. It's going to be losing some money pretty soon. So, but interesting stuff out here. SoundHound taking it on the chin. Number 9. We got the Amazonians doing the reverse. 372,000 contracts on the tape for them at number 9. 224.5, up $4 exactly, or nearly 2% for them today. So they are bucking the trend. Not that far away from the 52-week high of 233 out here for the Amazonians. So looking spicy at number 9, bucking the trend of some red out there. Number 8, we're going back to the red. Listen, this name has a lot of upside to give back if it so chose. This name's been a hot one of late. This is AVGO, number 8, 396,000 contracts. You know this name. It's been up, a whopping, let's go back a past month. It's only up 33.5% over the past month. So it's got some room to give up if it's so inclined. Giving up about a little over 1% of that today, $2.50, trading 221, pretty much even out there today. getting as high as 228 out there today, but off its 52-week high of 251.87, which it hit, looks like, on Monday of this week. So after rallying hard, giving up about almost exactly $30 from its high. So that's kind of interesting out here in AVGO, but still a hot one for number 8, 396. Number 7, the monster, is bearing its claws and its fangs again. Yes, we're talking about MicroStrategy, ticker symbol MSTR, aka the monster. Number 7, 571,000 contracts. Looking, dare I say it, a little bit less scary today. 331.64, off exactly $18, or about 5% for this name. You know the deal with this name. It's been on the rampage of late, even though it is pretty, at this point, well off its 52-week high of 543 out there, which it hit back. Did it hit that intraday after the election on the 20th? I'll have to go look and see exactly, but it's been a spicy, looks like it hit it intraday. Yeah, Wednesday, November 20th. The close was 473 that day. So after quite the rally, you've heard my thoughts about MicroStrategy in the past. Go check out the crypto rundown if you want more. Not a huge fan of paying other people to buy your Bitcoin for you. People always argue they do more than that. I get it, but it's a fun conversation for the crypto rundown. Go check it out. Number 7, MicroStrategy, 571 on the tape. Number 6, this name's come under some heat of late. I talked about before, a lot of people reaching out to me about this name from various disparate circles that I wouldn't expect to be asking about this name. So this one, breaking into the next echelon. Is it quite reached the old school cabbies and barber indicator where when they're asking you about it, maybe it's a bridge too far? I don't know if we're quite there yet, but it is interesting. This Palantir, 74.88, up 3 1/3 today, or nearly 5%. That's after they were coming for it yesterday. They crushed it down to, didn't get quite below 60, or 70 yesterday, 71.5. It went from $78 pretty much down to 71.5. So they had quite the drubbing. Getting some of that back again today. Number 6, Palantir, nearly 600,000 contracts on the tape. So, you know, it's a spicy day when, at least respectable, when we're at number 5 at about 605. Some days we don't get out there till number 3 or 2. AMD, number 5, 605 listeners, 119.5, off exactly $2, or a little over 1%. Good for number 5, 605 on the tape. Number 4, Uncle Mike's favorite, the Fruit Company. Back in fashion, apparently. 712,000 contracts on the tape. Up 230, or about 1%, trading 250 and about a half right now. A little bit off its recent high of 254.25, but again, looking pretty good. Well above its 52-week low of 164. Remember those days, listeners? Doesn't seem like that long ago. But that's what we were talking about not that long ago in Apple. Now here we are, 250. That buyback, just the beginning of a rash of good news, or good stock movement, at least for them. Number 3, our old pal Micron. Ooh, getting taken to the woodshed, listeners. They had earnings. We talked about them on the Monday show, what they were pricing in. And I'm guessing, just looking at this number, they didn't price in enough. Micron, 86.5 right now, off about $17.5, or nearly 17%. So just coming for it. At this point, it's not that far from its 52-week low of 78.63. And a distant memory is its 52-week high of 157.5. So clearly their guidance, no bueno, and that is weighing on the stock. 834,000 contracts for them at the number 3 spot. Number 2, yes, I said number 2 again. This has kind of been a pattern of late, ever since the election. Tesla taking the top spot, spoiler. But number 2 is NVIDIA, 2.46. It's a slugfest, though. It's a close fight. 2.46 million on the tape for NVIDIA at number 2. 132, pretty much even, up about $3 or 2.5%. So NVIDIA has been taken to the woodshed a bit of late. Ever since China said they're looking askance at them, they got into correction territory, sold off about 10%. Getting some of that back today, up about 2.5%, or about $3. But not enough to take the crown today, listeners. The number 1 spot belongs to Tesla, 431. We were just talking $200 not that long ago in this stock. 431, off $9, or about 2% today. Why? Because it's a day that ends in Y. But Tesla, 2.54. Maybe this new regime of Musk vetoing budgets and things is going to be enough to catapult Tesla back into the number 1 spot out here. Either way, Tesla taking the crown out there today. If you were looking at earnings, there were still some popping off. I just talked about Micron. That was yesterday. We had CarMax, Nike, FedEx, Darden Restaurants, and BlackBerry. Today, let's hit Darden there before the bell today. They did not price in enough juice. Spoiler alert, listeners. They went into their announcement almost 160, 159.87. They're pricing in 5%. They delivered nearly 14%. Actually, they're up 15.5% now. So apparently all is right in the world of Darden restaurants. This thing lighting the world on fire. Olive Garden, Longhorn, driving a lot of action out here in Darden. So apparently the meatballs' hatred of it, not enough to keep it down. Micron, we just talked about it, listeners. They were pricing in 12.8%. They delivered, obviously, at one point over 18% for this move. So buy and vol was certainly the order of the day in Darden restaurants and Micron. It's kind of been the order of the day for us all season, listeners. If you have not gotten the memo by now, I don't know what else to tell you. It's a hot one out there. Really quickly, we've got names popping off after the bell today. Let's go to Nike after the bell today. They're at about $77 when we ran this report for you this morning. They were pricing in $641. In the past, they've moved $652. So not a heck of a lot different there at all. So maybe they're not expecting a whole lot, which, as we've seen how that works out for people so far. Let's go to Carnival. They're tomorrow before the bell. $24.82 is where they were trading. They're pricing in $1.89. In the past, they moved to $1.60. So a little bit extra juice, but not a ton out there in Carnival. So no one really lighting the world on fire for tomorrow. The season, though, is lighting the world on fire. 121% is where we stand right now, listeners. That is well above our long-term rolling average of 114%. So the only weeks this cycle that were even close to break even were weeks 4 and 5. And week 4 was 107%, and week 5 was 102%. So just wild times out there. You're still making money even on those. So it's been a wild time for earnings. Is it a wild time for the Flowmaster and some unusual activity? Let's find out, listeners. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. It's that time of the show you've all been waiting with bated breath as we unleash the Flowmaster. See what wild, just complete, mind-blowing activity he has uncovered for us today. Let's kick things off. And a name we talked about once or twice of late. This is Bloom Energy Corp, ticker symbol B, BE. The Bloom coming off the roars for them today, listeners. $22.50, off about $1 or nearly 4%. So no love for Bloom. You remember these folks, listeners. They make these solid oxide fuel cells out there, which is a segment that it's hot, then it's not. A lot of not lately, including today. On the year, let's see. It's been a decent year for them, actually, though. It was $14.30 a year ago, and they had they actually had a bad year. They were down heading into Halloween. They were trading $9, so they had sold off over $5 at that point. And then the election came, and then we all know what happened. I think the prospect of looser regulation really just lifted this one all the way up to 27.5, but actually 28.70 was the high back on November 29th. Since then, it's obviously come back down. I wouldn't say back down to earth because it's still rich, but a little bit off the top here at $22.50. Certainly a lot better than where it was at $9 heading into Halloween. So if you bought this heading into Halloween, you had a 3Xer on your hand, so congratulations to you. Mr. Flowmaster, we talked about this name once or twice of late. What caught your eye out here in Bloom Energy today, sir?
Yeah, I was actually looking at the chart on this, and it certainly was a beneficiary of of how the election turned out, with that, more than doubling basically since early November. So what I noticed on this was basically kind of what I saw was a slew of call buying in the January 3rd weekly term, the 26 strike. A bunch of the 26 calls bought kind of in the 45 to 50 cent range. Now this was this afternoon, total of 5,000, almost 6,000 of them. And then when I actually looked back a little bit earlier, there's actually a couple of blocks earlier in the day, including a put seller of about 3,500 of the Jan 21 puts for $1.42. That was this morning when the stock was at 22.09. So the stock is higher. As you said, it's closer to 22.5 now. So that trade is working well. And I mean, I don't. it has pulled back from 28, back down to 23. So maybe this is somebody just coming in with a kind of a, putting on some longs, thinking that, after the holidays are through, I guess, it'll kind of get another leg up, probably, betting on kind of what the new administration really starts to announce in terms of energy and the whole drill baby drill stuff. So, but it's, when I see a put seller and I see call buyers, I don't know if it's the same trader or not, but those Jan 26 calls are pretty persistent, a pretty decent sized trade, considering that they expire. What is that? About 14 days from now, and the stock would have to be $6 higher for these guys to break even. That's one worth keeping an eye on for sure.
As you were talking, I was just dialing up our Wayback Machine to see the last time we talked about Bloom Energy, and it was actually you, Mr. Flowmaster, back on the May 23rd show, if you recall all that way back. So you talked about someone coming in and buying the 18 calls back in June, and they paid, looks like around 30 cents. They might have rolled them from the 16, so they were making money on those at the time. So they were buying the 18s. Listeners obviously want stock to pop above 18. Looks like it didn't work out, Mr. Flowmaster. The stock closed in June on expiration at $12.82. So by my math, that is below that strike. Looks like there were about 8,500 of these calls still open. So they got a little optimistic in the past, Mr. Flowmaster, on this name, and they have gotten burned. Do you think it's once bitten, twice shy, or think they're maybe onto something? You like these?
I kind of like these. I mean, I think that, there's a lot of uncertainty about how next year's going to go. I think some people, even going into the Fed meeting, right, like people are a little bit complacent, I got to say, right? And on the business environment and the regulatory front, like, there's an assumption out there, like business is going to be easier. There's going to be less reg. I don't know. I mean, the truth is, the Trump trade, which, plenty of people did immediately after the election, really did work out. So maybe just keeping it simple and saying, that this is where a company's going to see some real benefit. Maybe that I don't know if I would buy any, just because it's already, chunk over where it spent most of the year, but maybe I'll take a little nibble.
A little nibble, says the Flowmaster. As we keep on rolling, let's go out to a name we don't talk about a lot because we always talk about its sibling, which is GOOG, a.k.a. Class A. But the Flowmaster turning our eye to the good old Class C, which doesn't come across our radar that often, which is a.k.a. GOOG. 191 3/4, up about $1.50 today, so a little pop for them today. The year that's been out here in Google. You don't need me to remind you. I will anyway, though. Up about $53. Or about 39% from exactly a year ago, and year to date about 37%. So a good year for Alphabet, even though their Bard is, anyone who's played around with that, and ChatGPT, I don't think, or Gemini, I guess, is not exactly, they're not exactly apples to apples out there. But it's been a good year out here, Mr. Flowmaster, folks. Obviously betting a lot on the future of AI for the GOOG. What caught your eye out here, sir?
Well, so this showed up on, I have that trade of the day email, which I put you on the list for, and I apologize, I still haven't commercialized it so that anybody else can get access. But if you sign up for Trade Alert, I can certainly add you to the distribution list. But obviously with yesterday's market move, any put buys were profitable trades in general, unless you did it maybe in the last 10 minutes of the day. And GOOG was kind of dominating the top five, really, and it was all the same contract. It was the December 195 puts, and there were a couple big. These are not small trades; these are big trades. There was a 2,500 lot bought for $1.50. There was another 1,000. There was another 1,000. This was kind of all around the same time, very close to 10 a.m. I'm not sure. I thought the first half of the day, really until the Fed, was actually pretty quiet and trending higher. So I don't know if there may be some news crossed on GOOG. I know there was some news on quantum computing a week or two ago that actually we saw some options flow around. But in this case, basically somebody accumulated around 7,000 of these December 195 puts, meaning these were 2-day options yesterday. Now they're 1-day options. They paid $1.50. the stock was 196, and then with the sharp sell-off we got after 2 o'clock, stock closed at 109, near $190. Okay, so a $6 move in the stock is what they caught on this 2-day trade. These puts close at $5. It's a 250% winner. Almost $2.4 million on their is the dollar gains. And now I don't see them getting out of it. The stock's bounced a little bit today. The market's kind of recovered a little, but the stock's only isn't even at 192 yet. So this is just somebody who I don't know if they got lucky or they had an inkling, but they certainly jumped into a defensive position and it paid off. Within hours.
That it did. That is a fancy one. Let's get out of here on one more really quickly. Let's go out to a name we spot. This has been a hot sector of late, quantum computing, listeners. And this name says it all. Quantum Computing Inc., ticker symbol QUBT, QUBT. Not quite QBERT. Could go that way as well, though. Trading $14.70 off $11, or about 43% today, listeners. And if you go back, this chart is a mind-blowing chart. It was, if you go back like a few months, the stock was 35 cents, 60 cents. It just sat there all year. This chart just didn't move pretty much all year until right around, guess when? The election, listeners. All of a sudden it started popping up to $1.50. The next thing you know, it was $7.70 on November 25th. Then we all heard this noise recently with Google and quantum computing, and all of a sudden quantum computing is hot, and is it going to break the blockchain, et cetera, and so on. And this name felt the upside euphoria, let's say, to put it mildly. Got up to $27.15. Yes, this stock was 35 cents not that long ago, up to $27. So you could have the permanent call, listeners, for 35 cents, all you wanted. $27.15, and the market giveth, and the market taketh away just as aggressively, because a day later, we are off. Now $11.30, trading $14.40. This thing is just quite literally falling out of bed. So you might think, looking at this chart today, man, we got a whole bunch of puts going up out here today. But no, what our Eye of Sauron found out here today was actually kind of the opposite. It first came back with a block of 2,000 of the Jan 25s. Yes, upside calls for $3, lifting the offer. Now the stock was higher, $17.50, so over $3 higher, but still kind of strange. And we also noticed the exact same time a 2,000 lot of the Jan 30s. Even more optimistic. Also lifting the offer for $2.30. Now you might think, well, that looks like maybe a spread, but they went up a few seconds apart, but it doesn't look like a spread. It seems like what it appears to be. Folks really just scooping. As we started digging more, we saw a lot more volume. A total of 20,000 of the 25s have traded on the day now, and 12,000 of the 30s for a range of prices. 30s for $1.40. 30s traded as high as $3 this morning when the stock was $19.50. Now I should point out this is a short sale restricted, obviously, name, so that's going to play into this a little bit. But someone at one point lifted the offer. There were $2.75 at $3. They traded $3 for the 30 call. And this could be someone just getting run over and they needed upside. The risk manager is saying, get out of this. And that's probably what this is. But still, this is Mr. Flowmaster. Did you spot this? And somebody is really feeling it out here in QUBT today, sir. What are your thoughts?
Yeah, this is a funky one. I don't understand. I see the flow, and it does look like it's certainly offer side in the 25s and the 30s, and they're not trading as a package. But I also see vol down like 100 points across the down like 50 points at the 30-day term. But I don't see any headlines. So I just wonder. I don't know why, but there's something about it that's taken it from 350 vol down to 220 vol-ish in the shorter dated stuff. It's a weird one. I did notice that it as an unusual trade because it is big for the volume that this thing trades, but I don't know what's going on in there. It's a weird one. It is odd.
Some might say it is odd. Well, we will keep an eye on this one, listeners. This has been hot. And we're always keeping an eye on you folks, so let's give a little bit of time to you folks in the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, listeners, we got some hot questions of the week. Make sure you get over there and play at options and a bunch of other stuff you folks have sent in. But I want to make sure we save some time for this fellow who wrote in all the way from Bulgaria. I'll have to go look. He might be our first writer-inner from Bulgaria. We got a lot of international listeners writing in from all over the world. Bulgaria might be the first to put a pin on the map there. So congratulations to you there, Mr. Dealer. He says, hi guys, greetings from Bulgaria. First of all, I would like to thank you for the podcast. Really, really good show. Keep up the good work to enlighten people like us. I have learned a lot, but still the slope is quite steep. Well, keep it up, Dealer. You're ahead of the game already. You're listening to shows like this. He says, anyway, I got a couple of questions about options. First off, implied vol. When looking into the chain for options series under the same expiry and strike, I can see different implied vol for calls and puts. Why is that? Shouldn't the implied vol be the same when looking at the call and put for the same expiry and strike? And then the second question is the rule of thumb correct? Dividing the implied vol, I should say, by 16, you get what percent move the market is pricing for the underlying. Well, the second one is easy. Yes, it's a good rule of thumb to keep in your back pocket for if you're looking at vol and you're trying to turn that into some sort of intuitive number you can grasp for how much of a percent move of the underlying should I really be expecting with this. That is a good rule of thumb out there. But I think having the Flowmaster on, this first one is a good one for you as well, because you're out there putting together a lot of these options chains and this data that people are seeing. Mr. Flowmaster, our friend from Bulgaria is confused why he's seeing different implied vol levels for calls and puts on the same strike, sir. Set him straight.
Well, it's great that he's studying it, and that's the right question. And theoretically, we all know like a call can be a synthetic put, so it actually does kind of have to have the same volatility. But what ends up happening, especially in single stocks, is if there is a difficulty in borrowing the shares, so if it's a hard to borrow name, that's equivalent to having a dividend. And it needs to be basically taken out of the interest rate. And if you don't take it out of the interest rate, so that borrow cost, what you end up is it appears that the call volatility is lower than the put volatility. So now a lot of traders just get used to it and they get comfortable with that, and they actually use it as a signal that this is a difficult to borrow stock. But what I would suggest is if you put those two options into an options calculator and then start changing the borrow rate if that's a parameter, otherwise just start changing the interest rate because it's kind of equivalent, you'll actually be able to get those two volatilities to line up. And that's actually a trick that we use on the for Cboe theoretical values, and other vendors do it as well, is you do want your volatilities to be the same for calls and puts. There really is only one volatility for a given strike and expiration. So what you end up doing is effectively trying out different borrow rates until you get to the level where those two vols match, and then you actually know where the borrow is priced, and you can actually compare that to what it costs in percent to short the stock, and you should see a connection there. They're not going to necessarily be the same because you have differences in duration, but if something is costs you 15% to short it at your broker, then that actually would go into the input for a borrow rate, and then all of a sudden your calling your put volatilities will match.
There you go. Those divvies and short borrow rates always gumming up the works out there in a lot of single name. Yeah, whenever you see this kind of discrepancies, chances are a divvy or the rate is to blame out there. But great questions, Dealer. Looks like you're ahead of the game. You're selling yourself short. Thanks for taking the time to write in all the way from Bulgaria as we keep on rolling and go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show where we tell you what we're keeping an eye on. Uncle Mike, we already kind of had the Fed at this point, so that was kind of the last big catalyst a lot of people had on their calendar. Now they're getting the heck out of Dodge to go do some ice skating or do whatever else for the holiday season. What are you keeping an eye on out here, sir, in the markets until our next show next week?
I mean, I think bonds need to be the story. They're gonna tell the story going into the new year. I'm not expecting a lot of high volume trading over the course of the next. What do we have? Like 7 or 8 trading days left in the year. So with that, I think just I'm keeping an eye on the bonds.
And of course, you're going to study your 80s trivia for one final go on Monday morning, right?
Well, don't we? We got 2 more shows, I believe. We got the 23rd and the 30th, don't we?
Well, we do. You're right. So 2 more. Yes, 2 more. So I guess study for 2 more.
I'm still in the mix of this. We gotta make sure. I'm not gonna blow this lead the last 2 weeks. Knowing you might quadruple the points or something and start doing woodworking questions.
Not gonna take your boot off the throat of the rock lobster this close to the finish line. Mr. Flowmaster.
No, sir.
Mr. Flow. He plays a nice guy on the show, listeners. Behind the scenes, a ruthless, cutthroat fellow, if ever there was one. Uncle Mike. Mr. Flowmaster, same question for you, sir. What are you keeping an eye on until your next appearance, sir, on the show?
Well, I'm going to actually be digging in a little bit to the liquidity yesterday because I think it's a really interesting example of a, kind of a market shock. And I love to dig into that and also use the Cboe open close data to kind of see what the net positioning looked like. So, especially in that last half hour when we saw some pretty shocking moves. So I'll be digging in there and, just continuing to work on some great ideas in terms of the data and technology. We've had some really interesting conversations about a liquidity command in Trade Alert. So I'm trying to spec that out and come up with something nice and simple, but that will give you a very good picture of what the liquidity looks like for a given symbol or for one symbol compared to another or even one symbol over time.
All right, listeners, that music means we have come to the end of another epic sojourn from the option block. I want to thank all of you out there listening, taking the time to write in from far distant shores like Bulgaria. We thank you all for taking the time. Before we go, let's go around the horn. Mr. Uncle Mike, if folks want to reach out to you, maybe from an Eastern European country themselves, where should they go? What should they do?
Head to my website, stcharleswealth.com. Set up an appointment with me. I always enjoy talking to any of our listeners. And you can also follow me on Twitter at Mike Tosaw, Tosaw.
Got any Bulgarians in the clientele, sir?
I do not.
There you go. You need to add some. Reach out to Uncle Mike. Might be a little bit of a time difference, but I think you guys can work around it. stcharleswealth.com, the place to go to kick the tires and light the fires. And Mr. Flowmaster, you just talked about a lot of cool stuff. The rates and the flows out there for the different strikes and keeping the strikes lined up, the trade of the day tool. You just talked about some other cool tools you're working on out there. If folks want to check all this cool stuff out for themselves, where should they go? What should they do?
Just head on over to Cboe.com/RMA, which stands for Risk and Market Analytics, and you can see the platforms and the data offerings we have and request a trial.
There you go, Cboe.com/RMA. Tell them the Flowmaster sent you for a secret extra bonus. I won't say what that is, but the Flowmaster can decide what that bonus is. Cboe.com/RMA, the place to go to kick the tires and light the fires. We got to get on out of here. Back again, though, in a little bit. No rest for the wicked, listeners. I will be back to talk all things futures options with our friends over there at CME. So if you want to hear what's lighting up the tape out there in the world of futures options, stay tuned. We'll be doing that in a little bit with some fun special guests, so stay tuned for that. Back again tomorrow. I got a feeling Volviews is going to be a banger tomorrow, so make sure you tune in to that one. Should be a fun one. Then after that, one final time for the week, we go out with a bang with a little bit of unusual activity on options. If you listened last week, just the UVIX ratio spread alone is worth the price of admission for all this year pretty much. So check it out, theoptionsinsider.com/pro. The place to go to learn more. Then we're back again next Monday to see if Uncle Mike can drive the dagger home with a little bit of the option block. Stay safe out there, everybody.
The Option Block is brought to you by Cboe. Cboe's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy. and to help you make more educated moves in the market. Visit www.cboe.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of Cboe Global Markets Incorporated or any of its subsidiaries, collectively Cboe. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the Cboe products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.